morning and welcome to Market Report. I'm your host, and every weekday we'll help you understand what happened, why it happened, and what it could mean for the Indian investors. This is not a stock tip or a trading calls channel. It's to simplify the news, connect the dots, and help you become a better informed investor. Okay, let's begin with the top stories for today. India's markets bounced back after two sessions of weakness, led by financials and autos and consumer stocks. Crude oil remains near recent low after fears of supply disruption in the Middle East has eased significantly, giving relief to oil importing countries like India momentarily. Global investors are beginning to look at India again because of the oil price situation, and currency concerns have moderated significantly. The IT sector remains under pressure after a profit warning from KPIT Technologies, reminding investors that company specific news can outweigh broader market optimism. The rupee is expected to stay under pressure despite RBI measures to attract financial capital. Markets are entering the early phase of quarterly earnings session, where management commentary can become more important than headline numbers. Investors continue to monitor FM monsoon because rainfall affects rural demand, inflation, and sectors like FMCG, tractors, fertilizers, etc. Excuse me. And definitely the story of the day would be why oil still matters. Although headlines around the Middle East have become less intense, it is far from irrelevant. India imports majority of crude oil for its consumption. That means geopolitical developments affecting oil supply can influence inflation, government finances, and the rupee and corporate profitability. Over the last few weeks, markets were concerned that conflict in the region could disrupt shipping through the Strait of Hormuz, one of world's most important transit routes for oil. Since those fears have eased, Brent crude oil has fallen back toward the low of $70 per barrel. And why this matters is because lower crude oil prices can reduce imported inflation, ease pressure on the current account deficit, support the rupee, improve input costs for many businesses. Which sector would benefit? Aviation, paint manufacturers, tire companies, FMCG businesses with high transport costs, logistic companies. At the same time, companies whose earnings are closely linked to higher crude prices may experience different business dynamics. The key takeaway would be not that lower oil automatically means higher markets, it simply removes one important macroeconomic headwind. Global markets, US markets were mixed as investors booked some profits after a strong first half of the year, particularly in technology shares. This reminds us that the markets do not move in straight lines. Even during strong trends, periods of consolidation are normal. Okay. Across Asia, sentiment remains cautious as investors continue to assess global growth, inflation, and central bank signals. For Indian investors, the key takeaway is the global markets are not flashing panic, but neither are they showing broad-based risk taking. That generally keeps the focus on domestic earnings and policy development. Yesterday, the Nifty and Sensex recovered from a two-day decline, with banks, autos, and consumers shares being companies leading the rebound. Why were the sectors strong? Because financial stocks benefit from improving sentiment as macro concerns around oil eased, and auto companies gained because lower fuel prices can support consumer spending. Consumer goods companies outperformed after broker commentary suggested resilient demand, but also, even though the analysts highlighted that there could be a weaker monsoon because of El Nino effect and everything, it could be a medium term risk for rural consumption. Banks continue to be a backbone of the market. If the financial stocks remain strong, they can provide stability to broader indices. Information technology IT remains under pressure. The recent profit warning from KPIT reminded investors that the conditions remain uneven in parts of global technology industry. That doesn't automatically mean that IT companies face the same outlook, but it made investors more selective. FMCG have been outperforming. However, investors should also monitor rainfall because the rural demand plays a meaningful role in consumption across India. Auto, lower oil prices, and improving sentiments have helped auto stocks outperform. FIIs and DIIs. One encouraging trend is that overseas investors are beginning to revisit India. Equities, after oil prices moderated and rupee stabilized from recent lows. However, it's worth noticing that the rupee is still expected to remain relatively weak over the coming months, despite RBI initiatives to attract foreign capital. Rather than focusing on one day's institutional flows, a long term investor should watch where foreign participation strengthens consistently over several weeks. And corporate policies to watch over. Alchem Laboratories received favorable tax appellate orders relating to earlier assessment years, removing significant tax disallowances. Devyani International increased its stake in its Thailand business, reflecting its continued expansion strategy. Markets are also moving into quarterly earnings session. Beyond the headline profit numbers, investors should pay close attention to the management commentary on demand, cost, and future guidance. Events to watch today: any fresh developments in the Middle East that could affect oil prices, movement in gift Nifty before the opening bell, corporate announcements and earnings guidance, currency movements, and institutional activity, updates on the progress of monsoon. These are factors that may shape the market sentiment throughout the day. To summarize, the global cues remain cautiously supportive. Oil prices continue to be one of the biggest macro drivers. Financials, autos, and consumer stocks are showing resilience. IT remains a sector to monitor, and investors should keep an eye on earnings, institutional flows, the rupee, and the monsoon over the coming weeks. If you found this channel or today's report useful, please like, subscribe, and share to someone who wants to understand the market better. Our goal would be to not just follow the markets but to understand them. And thank you for watching.